All right. Good morning, everybody. Good morning. All right. Good morning. Friday. Job numbers. So, starting with that, starting with the economic events, as we always do. Futures are mixed. Bond yields rise ahead of jobs report. It's been jobs all week. That's not a surprise. It's been there all week long. Yesterday, the MOC, and in my house, this is recorded every day. I've got a spreadsheet that goes back all the way to September of last year. And on that spreadsheet, I can search for names and see what their buying power or their selling power was, going all the way back almost a whole year. There's a lot of names on this list. Every day I look at this list and try to get an idea of what sectors, where's the capital rotation. They'll rotate out of their positions and go into new positions, not necessarily going to cash. They don't do that. But they are always moving that money around, trying to find capital rotation. A lot of the names on the list right now, EV markets, banks, and energy. That's the buy side that we're looking at. It also helps to look at how many buy names versus how many sell names. You can see for the week, at least Wednesday, Thursday, and Friday, it's been buy side dominating over the sell side. Only on Tuesday was the sell side bigger. Now, just because you see the sell side bigger does not necessarily imply something negative, right? Remember, it's capital rotation. If they're selling in one area, then they're buying into another area. Today, 8:30, 10, and 1 o'clock. Honestly, that 1 o'clock, the rig count, it's not really anticipated to be impactful. I worked on the drilling rigs for 20 years. Maybe it will impact the people out there doing the work, right? Because if there's not enough rigs, it's hard to find a job. But it's not very impactful on our market typically. I mean, you can maybe go back in history and find times where it was, but most often not. That'll be 8:30 and 10 o'clock then for us. Really, the main one is 8:30. This is going to be the rest of the day right there. If these are deemed in any way by the market to be negative, that's it. Game over. We're headed down. And if they're positive, then we're headed up. There is that third option where it's cloudy or there's ambiguity or there's some doubt into what those numbers mean going forward. And then we won't really see a change in the market. I really don't think that's going to be the case today. When it comes to job numbers, there's not a lot of gray area there. It's either really good or really bad. The surprise can catch them sometimes. Maybe, the idea that it wasn't good or bad, but they were just drastically off, right? Because they do anticipate a particular number. They have this range in mind where it should be. And when it's a surprise miss drastically, they get, the egg on their face, but they also end up on the wrong side of the trade. That's alternate thesis logic. All right. So 8:30, just be aware of that and then trade accordingly. If at 8:30 everything starts to dump, well, then that's going to be our day. And if at 8:30 we start to rally, then that is going to be our day. I am zoomed out quite a bit because if we do dump or if we do rally, these are going to be the two ranges that we focus on, either getting back up to the ceiling, to the height of this range, or revisiting the lows of this range. And if you're thinking that looks a little extreme, it's not. It's not even remotely extreme. I'm not reaching here at all. Now, at any point, we can always measure and ask the question, how far is this move? Not even a 2% move to the upside. Now, to the downside, yeah, 2.5%. And that would make sense, right? Because they talk about taking the stairs on the way up, jumping out the window on the way down. A move to the downside, we'll just start with negative thoughts. A move to the downside would first have to make it through the Globex low. We would then deal with a price shelf from the other day. That's an institutional pivot point. The open from the other day. There are a lot of things along the way that we would bump our head on. Now, without being too negative, suppose it's just an okay report. Nothing really bad, nothing really good, nothing really extreme. That's yesterday's trading range. Now, if we bring it into scope, this is our range today at the moment. Globex high, Globex low. That's not enough room for me to want to come in and play in the ES. Maybe in the NASDAQ it'd be a little wider, but for the ES, that's not enough for me. I want more than that. So if this is what we get, and we could, I really can't see that, but we could stay right there for the rest of the day. That would be our Friday. That'd be a wrap. On the other hand, I really don't think that's going to happen. If we break that low and we start bouncing off the branches on the way down, you'll be able to pick that up across the board. You'll have a rising VIX. You know, the dollar will be moving, the bonds will be moving, and it should be easily spotted in the sectors, the AD, market breadth, trend, all of that. It shouldn't be subtle, right? We're not looking for like a slow grind here today. We're really expecting that the market is ready to make decisions, and they're going to enforce whatever plan they've been working on with those decisions today. A break to the upside would put us through Globex high. Then we would need to deal with yesterday's high, and then we would start working our way out towards these back here. Now, you know, the patterns that are already done, they don't matter anymore. All we're focused on now is what are we going to hit on the way back up. So around 44.40 and 44.20 and then 44.70. Nice, easy round numbers. Yeah, gotta love that. Man, Thinkorswim is a little wonky this morning. That's a technical term, by the way. You look it up in the Simpsons dictionary. Globex low, Globex high. This is our range right now. It's a very tight range for the NASDAQ because it is a wicky little bugger. This thing can get some legs and really move. A downside break. Let's just kind of zoom out of here a little bit. We've got the low of the day, or the low of Globex, the high of the other day, a Globex low from the other day, and a low of day. Really don't think we're going to make it this far down, but doesn't hurt to talk about it all the way down there. I don't see it even getting bad. I don't see it getting that bad today. The forward PE and the forward earnings ratio on our market right now is still really positive. So, you know, it's like a tale of two cities between those companies that are doing really good right now and then those companies that are doing really bad right now. You know, and when you start putting capital rotation into the mix, then it all just really starts to become the whole battle of growth versus value. Downside moves, got them marked out nice and clear there. Keep in mind the quarters rule, right? So, you know, these are going to be like pivot minors. Quarters would still be pivot majors. Majors come first, but minors will get you a trade so that you don't have to sit there all day waiting for an opportunity, right? You can always catch a minor. Just to get a feel for what this would look like, there's a 2% move to the downside. That'd put us at 14,600. Nice round number. Something in mind. I'm going to go ahead and put that on the chart. 14,600 is what we would be looking for in a 2% move. And 15,200 would basically give us a 2% move to the upside. I'm a little off, but not too far off, right? In the grand scheme of things, it would be close enough. We're basically answering the question of, if this thing gets bullish, how bullish could we get? What could we target using, strike prices or whatever? I don't sell options against the NASDAQ. They're just too expensive in buying power. But the MES, selling puts in the MES is 7 times cheaper than selling puts in SPY. Cheaper is not the right word. It's a buying power reduction. To sell SPY puts is going to take a buying power of like $8,200 to $8,500. To sell an MES put is like $1,100 to $1,700. So it's significantly cheaper to sell MES. Not cheaper, right? Significantly though, from 8.5 to 1.5. So, selling puts in the MES, that's the way to go. But I don't do it in the NASDAQ. Account wise, I just don't. If you got a greater buying power than me, yeah, this is definitely something to consider, right? So an upside move, we would first need to break Globex high, yesterday's high, then we'll start challenging our way through. I'm not going to even mark the roundies, but of course the roundie, we would have to get through both of those, and then we would work on the next major one, which would be right around 15,162. All right, so let's bring up what has been rocking our market lately. And that would be the dollar and the bonds. When these two things have been moving around, they are impacting our market. Now, I've had quite a few people say, I don't understand how I can use these. And I get that, right? It takes time. We're not economists. I'm not one. Maybe you are. I'm not an economist. Don't even try to dig into the correlation between, a strong dollar and a weak dollar and how we can use. Yeah, forget all that. Look at where the market is. Are we sitting on a shelf? Are we sitting against resistance? So, for an example, the ES is a minor resistance right now, right? Where it's bumping its head. It's trying to go up and it's got a minor resistance. Well, look at the bonds and look at the dollar. Are they also going up? And are they also against a minor resistance? If they are, then you know that stocks and bonds are moving in the same direction today. But if you're looking at the ES and it's pressing against a minor resistance, and you look down at the dollar and it happens to be sitting at the low of a price range, sitting on a support level, not against a resistance level, then you know that they're inverted today, that they're not working together. Technically, they're not supposed to be working together, right? But we know that we've been seeing it. They are working together sometimes. So rather than assume we know the answer, look at what they're doing today. The ES and the bonds and the dollar are all three moving up at the same time. That's not conjecture. It's not an opinion. It's fact. You can see it right there on the chart, right? So it doesn't matter that it's not supposed to do that. That's what it's doing. Now, how do we use this in our trading? If it begins making significant moves, then you're going to see significant moves in the NASDAQ and the ES. Maybe correlated, maybe not. You got to check first which direction is it going. Right now the ES is going down, the dollar is going down, the bonds are going up. They're now starting to literally diverge while I'm talking. It's just like any other indicator out there. the confusion block, we turn on the indicator, tilt our head sideways, close one eye, squint with the other one, and maybe you figure out what it's trying to tell you, right? Get the Ouija board out. When this thing makes significant moves, we are very likely to see significant moves in our market. That's the main takeaway. If you see it against a resistance, prepare for it to break out with an explosive move. If you see it against support, prepare for it to break down with an explosive move. Look at the position that you're in and look at the thing that you're wanting to trade. Is it getting ready to also press against a resistance, press against the support? Is that going to hold or fail? And then use the VIX to confirm what it is that you're seeing. Is the VIX climbing and breaking to new highs? Is the VIX sitting at a low and getting ready to fall lower? That is how you can use these things together. Now, it's not easy. It certainly isn't easy because the rules change. Sometimes when the bonds go up, it drastically makes our market go down. And yet sometimes the bond goes up and our market goes up too. So we can't just decide that they're an inverted market. But what we can do is recognize significant moves, very extreme moves that really stand out. Like, oh, dang, that was a big move. What, and when it's nonstop and it just keeps going and going and going, and it stands out, right, as it should. Or when we start getting very large, very extreme candles, it stands out. Look at the bonds yesterday, where we just opened and dumped through the morning. Okay, we're on the S&P 500. I like to pick the market cap. All these other ones are fine in the middle of the day, but in the mornings, I just leave it on market cap. Change performance day to performance pre-market. And then I use the filter and I knock the names down to around 100 names. Oh, spot on, perfect. Right there, 100 names. All right, so it only changes color if the names have moved more than 0.5 in either direction. If it's negative, it's red. If it's positive, it's green. So a lot of these gray ones, it's not necessarily that they haven't moved this morning. It's the fact that they haven't moved enough. You can see Bank of America, for an example, has moved pretty good, but just not enough. Finance is looking really good, by the way, yeah? Finance is looking good. Definitely want to look at some energy markets again. We shorted energy earlier this week, and it worked out really good. Maybe follow up on that a little bit more. You can see the sectors this morning. Energy, airlines, energy, finance. Right now, emerging markets is something that I keep on there all the time, and it's because risk on, right? That is pure speculation right there. If they are in any way concerned about global economic supply chain issues, any worry or fear or hesitation or consternation, they won't go after the EEM. And yet, if they're feeling bold or if they feel like things are turning around to the upside, that is where they go in speculative markets, emerging markets. All right, so keeping that one on there is like a risk on, risk off indicator. If it's green, risk on. If it's red, it's risk off. If it's very close to flat, then they're waiting on a decision. Sounds familiar, right? Because we know they're waiting on a decision today. All right, so this one, we flip it over to the NASDAQ 100. We leave the market cap on there. Pre-market change. There's no other filter required. We're there. That's what we got right there. It's all we need. There are no financial names in the NASDAQ, or excuse me, the NASDAQ 100. Let's say that appropriately. The NASDAQ itself does have financials. The NASDAQ 100 does not. And even that can get tricky because a lot of, quote, financials aren't really financials in their listing. They're information technology, right? Like Visa is tech. I know, right? When I have tech issues, I don't think, gosh, I need to call Visa. Maybe they'll help me with my computer. No. And yet, I mean, like PayPal, that to me, PayPal is finance. Yeah, no, but it's not. Technology services. Retail, keep your eye on Amazon. That thing was making some pretty good moves yesterday. Yeah, it gets some legs underneath it and goes. We put on a far out of the money trade in Amazon yesterday. Just took advantage of the price shelf. It's an extra $100 in a week. $100 isn't gonna make or break anything, but you know, so it's a free $100. There is risk, of course, but it was a very low risk trade. All right, pre-market change. We're on the S&P and at or above 25%. What has moved at least 0.25% this morning? How many names? 21 names. Energy, automotive. Um, I was looking at Raytheon yesterday, and I see that Boeing is up this morning too. Probably follow up with Raytheon again. Some transportation names got FedEx, deliveries, right? But it's mainly finance and energy, finance and energy. And you can't miss Starbucks being in there again today. So restaurants, right? I would be following through with like McDonald's and Domino's Pizza and Papa John's, see what else you can find in there on the restaurant side. Remember, a lot of these names are the precursor for your day, right? If you find one or two names starting to rise up in there, the front runner for their sector or subsector. NASDAQ, pre-market, how many names? 13. Now, I know this doesn't sound very bullish on either side, but you got to remember, before the numbers come out, they're not going to commit anything, right? They're going to wait for the numbers to come out, and then they're going to start getting committed. So I would definitely revisit this at 8:35, 8:45, maybe 9 o'clock. I'd come in and look at it again. If you find 60% of the NASDAQ up in the pre-market, more than 25% as we come into the 9 a.m. Now we're talking about some bullish activity. Today, I would really lean in the sectors. We don't have to be stock pickers. Follow the sectors, follow the play down the rabbit hole that way. Never hurts to just take a peek at any of the news in here, although this isn't like my news source, because this would be way too slow, way too late, right? But just a nice broad outline what's going on. Weekly options. Companies that have weekly options, TrendSpider won't let me make a watch list with 600 names in it. So I had to break the names into two groups. Got a lot of names in here that are up at least 0.75%, so 0.75 or more. It's a good way to sort these things. Between the two lists, it looks like we've got about 75 to 100 names. Now there's 600 names total, so that's not even, that's not even a quarter of the names. And on a good bullish day, there'd be a lot more than this. But it's a good place to start, because it's the sectors and the subsectors that we really want to look at, not just the individual name, right? And then from that, looking for the opportunities. Be very careful today, guys. Let these job numbers come out. Make your trade decisions based on that. And this should be the one for the month, really. We could play it week by week, but for a lot of the swing trades that I was looking to take, I wanted these resolved before I started to do anything. And I really think market-wise today we'll get the answer, right? If we're going to be looking at swing trades and 3 out of 4 markets follow the S&P, if we resolve these lows and these issues today and the S&P starts to run, then it's game on across the board. We'll be getting right back into the sector rotation that we were in before. Now, IBD likes to break things down into a market in correction or a market trending. In correction, they really start saying, this is not a time to run out and open a bunch of new trades. That we want to see it come out of that and be in a quote trend before we start opening a lot of trades. But then they will also say, if you do want to start looking for swing trades, start small, build into the position, and be ready to cut bait and run in a moment's notice, because we are not in a trend. right? So, just kind of keep that in mind. Technically speaking, they say that we are a market in correction. That's what I got for you guys. Be careful. Have a good week. There will not be advanced options class tomorrow. I'm going to a family reunion, so no advanced options tomorrow.